What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Pete Turner. How you doing today, Pete?
Great, Dan. Great, Dan. Great to be here.
Oh, awesome. And I got some even better news. You might not know about it, but today we are joined by my very favorite audience member. And why is my favorite audience member here? Well, this is a chance encounter where I interview commercial real estate syndicators, investors, that means buyers, sellers, all that kind of stuff. And you may ask yourself, why would I do such a silly thing? Well, if you've ever heard of private off-market, also known as 506B deals, then you may know that you're not allowed to share those deals unless you have a documented prior substantive relationship. And so that's part of what I'm up to here. I'm finding out what is my guest's level of sophistication, appetite for risk, core competencies that they're looking to contribute. And the beautiful thing for you is you will learn how to effectively communicate on the subject of commercial real estate and know how my guest fits into those deals. But before we get too excited about your business, Pete, do you want to say a thing or two about yourself? Maybe the motorcycle in the background?
Hey, Dan. Yeah, thanks. Yeah, I've been investing in real estate really hard since only 2018. So we bought our first four sets of townhouses back then, and now we've grown to just under 50 units that we own and operate. And my wife and I, Katrina, we've been enjoying investing as an LP, that excess that we have every month. It's like somebody else in the household is working. We have the cash flow. We've been enjoying putting that to work the last couple of years as an LP. And you know, doing that process, we started to learn like, hey, it would be really cool to be on a GP team and do some syndication, fundraising, asset management ourselves. So now, we worked with some coaching last year, and we kind of built our brand. It's Capital Turners. We got our little logo here, and we're really enjoying it. Really enjoying making connections, and really focused on two markets. We're focused on Charleston, South Carolina area, and we're focused on Lexington, Kentucky area. And I'll be traveling back to South Carolina next week to look at a deal and just kind of assess things, build relationships. But the motorcycle over my shoulder is a 2007 BMW GS 1200 Adventure. It's my dream bike. I made the mistake of renting one once a few years ago, and I just fell in love. So I love the BMW adventure bike. I'm a big guy, and I can ride it upright, and it's pretty awesome.
So that's a 1.2 liter? Is that like that's what the 1200 stands for?
Correct.
Wow, that's really something.
Yeah.
That's really fun. All right, awesome. But the first segment that we always go through in this interview is the 5 distinct motivations. Before I get too excited with that, I gotta say, but wait, check your 8. Pete, I don't know, I see you know motorcycles, but I don't know if you know these digital devices or whatever, but maybe you can see through the camera and into the user's device. And down there, there should be this hideous subscribe button, and maybe they should do something, but okay, it's a stupid joke. Anyway, the 5 distinct motivations. I've discussed why people are involved in these deals with all sorts of different commercial real estate, syndicators, buyers, sellers, and all that kind of stuff. And everybody has their own unique why. But at the end of the day, I found the different reasons fit pretty neatly into these categories. And the reason why people like me have to know what those are before we get involved in any sort of business is because there are risks involved. These take time. It takes months even just to close on one of these. So the question is, what's going to make my guest follow through. And these 5 categories, I go through them in every episode. The first one, preservation of purchasing power. What on earth is that? Well, if you already have a portfolio of assets and that the proceeds from ownership is how you make ends meet, well, the only reason you're going to make another acquisition and go through all that hassle is either inflation is rearing its ugly head, and so you need to it's basically eating away from the purchasing power of that cash flow. And then the other one is if you can buy at a steep discount, like when there's distress, or you can otherwise, because of the asset crash or something like that, you can buy at a steep discount. That is the reason why they make their next acquisition. But I'm not there yet. What I'm up to is trading time directly for wealth. And what that's all about, see me, I've got a background in tech, and the problem with being in tech is you may be a high income, high salary, high wage earner, and that means you're paying more in tax than anybody else. And I found that out because my old boss, he was flipping 10 houses a month like clockwork, doing 10 transactions every month, and I saw that he was making way more than I was but still paying less in tax. So I'm like, well, how do I pivot to where I'm getting rewarded in the form of deployed capital, aka equity? And so that's what I'm up to. But that's a little too abstract for some people, especially a lot of youngsters who come into this industry. They see all the zeros in the transactions and they're like, hey, there's a real opportunity for me to take over my schedule. Maybe it means fast track retirement. Maybe it just means taking a few months off each year, or
W2 optional. Yeah.
Exactly. That sort of thing. So when people are choosing this one, they really are doing it so they work hard now so they can scale back later. But that's different from the next group. They're just plain ambitious. They're after that generational wealth. They want to buy their entire hometown. The idea being that their great-grandchildren won't even have to hold a day job. And that's where they're really pointing, which that's great because they'll hustle into their 90s. And that's just the same as this last group. But the focus is different. This last group, they've picked a sector of society, or maybe it's the environment. Maybe they want to send people to space or take care of animals. Who knows what it is? But they figured out that there's a financial component to having that big impact. And so they are making these acquisitions to help with that sort of aspiration. So Pete, as far as you're concerned, those 5 different motivations, what combination of those would you say describes you best?
I would say the least one is the generational wealth. My wife and I are both a fan of taking care of ourselves, making sure we probably spend it before we leave it. However, I am excited about, at one point in my career, $100,000 a year is considered a great salary. I'm excited about being able to give that amount away a year to things and causes that we care about. And in that, that would probably be about 10% of our income for the year. So we're working towards that. That's pretty exciting, to be able to give at that level, but also have earnings at that level. So, that's why we have capital turners, and that's why we're continuing to build. At this point now, my wife and I are both W2 optional. We actually both stepped away. So we have that cash flow coming in. We really haven't been bitten behind by inflation at this point. We live pretty modestly. But, we do realize that we need to build some more because we want to be able to travel on this thing we call life. On this trip, we want to be able to take many trips and go to Europe, go to Puerto Rico. We like to winter there. And we don't really want to have to care about that money. Like, we want to be able to spend it freely and have a good time. And right now, we have enough to live on. We're living very well by most means, but just want to build a little bit more before we say, okay, no more working hard at this.
I love it. And that actually brings me into the next question, which is the tolerance for risk assessment. And if you've ever been involved in a 506B deal, the securities attorney that's hired by the issuer, they're going to insist that you fill out this questionnaire with a bunch of really invasive financial questions. Basically, this syndicator is going to know more about your financial situation than you know about your own parents' financial situation in all likelihood. But there was one question in that questionnaire that I thought didn't really really effectively achieve what I thought it was supposed to achieve. And that was the question about tolerance for risk. So for that, I've got a fill in the blanks question. And it is, there are many popular investment asset classes, but I think blank is too risky. So Pete, it can be inside real estate, it can be outside real estate. What's too risky for you?
Yeah, Dan, I think the risk can be managed, can be mitigated if I know more about the product, service, or investment. But right now, when you say that, I really think about oil and gas. I know that there's quite a few different options of oil and gas investments, but I really don't know enough about it. So because I don't know enough about it, to me, the risk is too great. But that can be overcome by learning more, connecting with people that do it, just like we have in real estate. Real estate was scary once too.
Yep, definitely, definitely. I love that. And me, I like to follow people, high net worth individuals, people who are, in that region and see how they're handling those because they're not high on the hopium, as they say. But I love that answer, and I'm just eating it up like a subscribe sandwich there. Isn't that really something? That's what I use to remind myself that it's time to pull out the dandoesdeals.com commercial core competency cube, and you can get your own copy of it, which has the 6 different roles in a commercial real estate deal. You can get your copy for free at dandoesdeals.com. And like a complete dummy, I don't even ask for any of your contact information, and that really is the cardinal sin of marketing. You never give away your freebie without asking for some sort of contact information. But the reason why I do it is because I really want nothing in your way to stop you from printing this out, practicing explaining these 6 different roles. Because if you are looking to pursue commercial real estate as part of a side hustle or your main business, it's going to hinge on your ability to explain this stuff effectively. So that's why I go through every single side in all of the Chance Encounter episodes. It takes 2 minutes, and I want you to practice it. So let's get started. Repositioners are the first rules I want to talk about. They are acquisitions people. So they are finding the property. They're checking it out. They're doing the paperwork. You might ask, what is this paperwork? What exactly are they doing? And the answer is, there's a fancy word for it. They're underwriting the deal. What's that mean? It means they're doing the arithmetic. They're figuring out, first of all, is this property even making the amount of money that this seller or broker is claiming it is? Because there's a good chance that it's not. And I call these guys repositioners to try and get more specific and say what their roles are. But really what they're trying to do with all those numbers is they're figuring out, how can we find some more upside? How can we make this property make more money than it is right now? And the first way that they do that is a little bit unintuitive. It takes some time to get your head around it. And it's the reason why repositioners always have a lot of investor relations. In other words, they're talking to all sorts of financiers. They have to have a big network of lenders. And the reason for that is because if you can secure a more advantageous loan, that goes straight to the profitability of the business. So those financier relations with people who only deal with paper and money, they're absolutely pivotal to a repositioner's business, but they're not allowed to be on the GP team because they don't have asset management requirements. But the repositioner does have to have those asset management requirements, which is part of operations. So, and they're stopping those Benjamins from going down those toilets. But of course, there's more to operations than just the asset management, unclogging toilets and collecting rents and mowing lawns and that sort of thing. And finding those ways to cut those expenses are huge. And one of the contributions I have to the asset management and the operations, there's a couple. One is the programming and automation from knowing about mass marketing, mass emailing funnels that I do. But the other thing too is, even if you are in those bigger buildings, which is what I focus on, 100 units or more, and you're outsourcing to a property management company, if you have a vacancy rate problem, somebody with some serious marketing chops needs to step in and get those units filled, which is one of the things I offer for my GP teams. But of course, the operations piece of the puzzle, you're only going to have so much success cutting expenses and whatnot. So frequently, the repositioner will get a contractor team involved to do value adds, to upgrade those units, to make them nicer from renovations. Why would you do that? Well, the idea is that if the place is nicer, then the future resident would be happy to pay more in rent than the previous one. And so that way
Mm-hmm.
you've got some upside baked in. But you have to be
Right.
super careful with contractors. You can spend endless amounts of money on it, and the real name of the game is return on investment. So you can't be gold plating those toilets, but of course you also have to make sure that your contractors are finishing in a timely manner, because empty units cost money. And you also need to make sure they're not using subpar materials. And the question is, how are you going to do that? Well, if you're like me and you have the same problem that I do, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that definitely will not be me. I'd still be stuck at an airport in an hour or two. So that's not going to work. I cannot be an effective local, boots on the ground for anything in the United States. But
Absolutely necessary.
you have to have that local involved to keep an eye on the contractor team, make sure they're finishing in a timely manner and doing things, they're not cutting corners, and same with the operations team. But when the repositioner has found that ideal property that they want to get with this team they've assembled, they turn around to the financier and they say, hey, I've got this great property in mind. It's 350 units and it's tens of millions of dollars. You don't happen to have, I don't know, say tens of millions of dollars you want to lend us, do you? Well, the financier is going to have one other question that I haven't answered yet, and it's a really important one. And some gurus and coaching programs, they really gloss over this one. It is, who's the sponsor? Who's the KP? What's that all about? Well, let's do a hypothetical to explain this. You're, let's say, a physician or an engineer or an attorney, something like that, and you decide that the local apartment complex in your area, you want to take it over with your circle of friends. Everybody puts in their 100K or whatever it is, and you want to take it over. So what's the flaw in your plan? Well, the bank is going to require that you include somebody who already owns a similar asset. So in other words, if you want to buy a 350 unit apartment complex and get a commercial loan, somebody in the fold has to already own a 350 unit apartment complex. On top of that, you and your team need a certain amount of liquidity, and you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Pete, as far as you and Capital Turners, that organization you've got there, what are the sides of the die that you guys focus on?
Absolutely. So I like the symbol you gave for operations, the toilet. There's actually a feng shui tenant. A tenet of feng shui is to always close your toilet lid, because if you leave it open, they believe your money's going down the drain, which is kind of cool. So I would say the repositioner, and making those relationships for capital management. But right now, my goal is to secure a deal. I've been writing LOIs and underwriting. I have some other folks that check my underwriting just to check with people, because we're new at this. And then if I get something in one of the desired markets, I absolutely know that I have the relationships and a team, a KP. I get the format of a GP team that'll come around that with some capital raisers. 4 or 5 people that have an interest in it. And boots on the ground is critical. I know in South Carolina, through a friend, I've been introduced to somebody there that is a contractor and is willing to, be boots on the ground within 300 miles radius of Charleston. So, we have that formulation. I feel very confident that if I find a deal, that we'll be able to put a team around it, an experienced team. So it's not going to be Capital Turners who's never gone full cycle or nailed down one of these things. It's going to be me helping out on a team of people who have done this before. So relationships are critical. But right now, Dan, I would say repositioner, which is an interesting phrase. So basically doing the underwriting and looking for deals.
Right. Beautiful. And that brings us to the buy box. I love how you were saying, Pete, about how it's a team sport. We'll get into the team itself a little bit later. But as far as the buy box goes, our next question, when syndicators, deal makers are talking to each other, they're saying, hey, what are you looking for? They're trying to say what's easier to say yes to and more difficult to say no to. And Pete, you already addressed some of it, but when we're talking to each other and asking that question, we're really asking about three things. First one's geography. Where is it? Which states, which county, possibly which neighborhood? Okay, it's all going to matter. Second one's going to
Right.
be size. And most of my guests on this show are in multifamily. And the way that you define size in multifamily commercial real estate is by unit count. The idea being that you have a completely different type of team who's taking over 8-unit apartment complexes versus the ones that are taking over 150 350 unit apartment complexes. So that size matters. And of course, like, there are other forms of commercial real estate that go by square footage, but unit counts what we usually use on this show. But the third one is called class. And one thing I don't like about the term class is that they're using the same word for two completely different things. So I separate them into condition and area. And if you're talking about condition, that has to do with how old the building is, how beat up the building is, and is it full of all sorts of fancy luxuries and amenities, or is it really no frills and bare bones? That's the condition. And then the second one, the area, what they're asking then is, what are the school districts like where this property is located? What about the crime rate where this property is located? And then, of course, the old saying of location, 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 really what they mean is traffic, traffic, traffic. In other words, if a whole whack of people go past that property on a daily basis, then it's going to be more desirable than a place that is basically crickets. And so both the area and the condition, because it's really about desirability, they're ranked the same way as in grade school, where you got A plus at the top, and then it goes A, and then A minus, and B plus, and so on. So Pete, you already mentioned some things about your buy box, but just in case there are VAs in the audience, let's go through it one more time there. So what are you looking for specifically?
Yeah, so geography, as I said, very focused on South Carolina, the greater Charleston area, and Lexington, Kentucky, the greater Lexington area. And that is because of what you said, schools, jobs. If anybody's ever returned an Amazon package on the East Coast, it goes to Lexington. There's just a lot of jobs, there's a lot of workforce housing, and that's where we go. The next category was what exactly, which order?
That was a unit count for the
Unit
size.
count. Okay, so unit count. So in South Carolina, I can leverage some of my GP partners already have stuff active and managed in the area. So I go a little bit smaller in South Carolina, where it would be 50 units and up. In Lexington, it'd really be 100 units and up, maybe even 150, 200 unit count building, because we'd be establishing a new team there. And you really want to have that foothold so you can have a proper property management, maintenance, et cetera. But over in, South Carolina, we can go a bit smaller and leverage our relationships in the area.
I love it. I love it. So then the next thing brings me to
Cool.
the team. So
Class.
yeah, exactly. So the team then, the die is the best way to really go through that. But the thing to keep in mind is, my favorite part, at least, of commercial real estate is because it's multifaceted, we're all eager to help create new teams, give recommendations and whatnot. And even though we all, we are so eager to do that, our own skill sets sort of dictate who we're able to help more than others. And me personally, because of the online piece of the puzzle, the different technology and marketing and whatnot, I'm always eager to speak to more sponsors and KPs. The reason being that they've already got a foundation of a business going, and I'm the type of person that needs that foundation to make a really disproportionate difference. Whereas when you're first getting started, say as a repositioner, you need grunts who are putting in 80-hour weeks and just hustling like crazy. Whereas I'm thinking of ways to work smarter, not harder. But the other one too, because I'm from the internet, is I'm also always eager to speak to locals who may or may not be repositioners, because again, I'm from the internet. But Pete, as far as who's out there in the audience that you can help, if you have any 506B deals that are active right now, you don't mention them specifically, because that's a big no-no.
Yeah, I do not, but I love to talk about real estate and alternative investments. So if there's somebody out there that, maybe they've recently left corporate, or they switch jobs and they have some money stuck in a 401k, I love talking about using self-directed IRAs. I love talking about building wealth and alternative investments. The ones that I'm familiar with is obviously real estate, a little bit of that gold, to have a safe spot. And also on the other side of things, ATM funds. So if anybody wants to talk about any of the above, they can certainly reach out to me. And then, we'll stay connected. If we find a deal or they find a deal, I'd check it out.
I love it. I love it. And then that brings us to how to reach out. Me, I got this distinct last name right here, so that makes me really easy to find, especially on LinkedIn, where I spend most of my time. After all, I'm now a top commercial real estate voice on LinkedIn. I got a badge and everything. But if you use your phone to scan this code right here, that brings you to the FAQs page of 506BME, which is the platform where I offer the service of documenting your substantive relations of your investors. The importance of that is that when the SEC audits you, the thing that they're looking for is proof that if you did any 506Bs, that you actually had that documentation in place before you offered your deals to anybody. So that's one way that I can help. But Pete, if people want to reach out, social media, email, website, what's the best way to reach out?
Absolutely, Dan. Yeah, I'm most active on LinkedIn. I believe that's where you and I had met. And I can be found there just by my name, Peter Turner. But also you can get connected to me on Capital Turners, capitalturners.com, just all together. And that'll show you some of the educational stuff we have, and we can connect.
Exactly. It's a great call. And that brings me to my last thing, which is actually not for you, Pete. It's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and maybe like migraine like symptoms, I'm confident it's the hideous subscribe button that's to blame. And you can get rid of that for free by just clicking on it. And of course, I'm biased. I want people to click on it because if enough people do, then YouTube will start to pay for these videos instead of me. And I think that would be amazing. But the trade-off for you, just so you're clear, as I said, is completely free. All it means is my videos may show up on your list of suggestions, but you can feel free to ignore those suggestions because I just really appreciate the fact that you spent this time with me. Just like Pete, I appreciate you joining me today. This has been great.
Absolutely, Dan. Thank you so much.
Awesome. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.